Dow's good for 161. Farmer Jim, Mr. All In. I guess the market's finally come around to your point of view. It's listening loud and clear, Jimmy.
Well, you know what? It's such an easy point of view to have. First off, 90% of the time you're going to be right if you're just bullish. I really don't understand people who get so bearish and really stick to their guns. You're like a salmon swimming upstream all the time. It's such hard work. Why don't you just go with the flow, which is always higher? And there's reasons for it to be higher, right? We're seeing where earnings are. They're high. They're growing. Yes, there are risks out there. But, Scott, there's always risks out there. There's always risk that Congress does something stupid or that the Fed gets aggressive, which, by the way, it's not going to do anytime soon. What you have here is early in an economic expansion, you got profits growing, you got jobs are plentiful. Yeah, I know there's supply chain bottlenecks. They'll work themselves out. I can't tell you how soon. I have no idea. I can't tell you if it's 2 weeks, 2 months, 2 quarters, but I don't think it's 2 years. And the people who are doing that doomsaying, I think, are a bit ridiculous. This is a good time to be in the cyclical trades. Doesn't mean you give up on FANG. FANG is performing well right now, and for the long run will do well. But right now, the cyclicals, you see energy, you see my Marathon Petroleum, you see industrials, you see my Northrop Grumman. I could go on, but it's a good time for the cyclical trade early in an economic expansion.
I'll tell you what, Steph, it does feel like the whole tone of the market has changed in the balance of a week. So I wonder if it's just time to capitulate on all this correction nonsense. I mean, Baycrest Jonathan Krinsky out with a new note just before we came on the air. He says, quote, seasonals are now a tailwind. Optimistic sentiment has been reset, and we're seeing consumer discretionary break out of a multi-month base versus staples, which is generally indicative of risk on. I read some comments yesterday from Mike Wilson that are making the rounds where it sounds to me like he's ready to capitulate. Now, we'll find out from him directly if he's willing to do that. But it sure sounds like it. Is it time to capitulate on all that negativity, Steph?
Yes. I mean, I've been positive, especially about 4Q, because seasonally it is strong. I agree with a lot of what Jim just said. There are tailwinds. Liquidity, it's ample. Even with the taper, it's still tremendous in terms of what we're getting. From the monetary side, we might even get more on the fiscal side. Don't know about that, but that could be a possibility. Interest rates are benign. They're rising, but they're rising slowly, and they're rising for the right reasons. Better growth, more inflation. Consumer is 70% of the U.S. GDP. They have jobs if they want them. Wages are going higher, and they have $2 trillion in excess savings, so there's pent-up demand. You add all of this up, and you have earnings that probably get revised higher. And why is that important? Because stocks follow earnings. And I think you're already starting to see earnings go higher. Look at the banks. Every single one of those names beat, and numbers went higher. So that's a good sign. We still have a ways to go. But I am encouraged so far. Now, I worry about inflation. I worry about energy prices and demand destruction, especially for the consumer. So that is a very big watch point for me. But between now and the end of the year, I want to be long, and I want to be in cyclicals and reopen names, because I think that's a theme that's going to carry into 2022 as well.
That's where Marko Kolanovic is talking about again today. Stay cyclicals. Tom Lee, all signs point to more risk.